Okay, this is job order costing, which means that we are going to be keeping track of the cost of a particular job. This is an example of a guitar. So we're making a guitar, and this will tell us how much it will cost us to make the guitar. It will also allow us to keep up with how much we have in our materials inventory, which is our raw materials. Also, in our WIP inventory, which is the inventory currently being worked on, and in our finished goods inventory, which is the guitars that are ready for sale. And so let's just start at the very beginning. We've got Legend Guitar purchased on account 750 units of raw materials at $14 each. So if we bought 750 at $14, that will be $10,500. So for this particular one, we are going to have materials inventory for $10,500, and it says that we did this on accounts, so that would be accounts payable for $10,500. We promised to pay for it later, and so our materials went up, and that's why we're going to credit accounts payable. All right, and then Part B, raw materials were requisitioned for production as follows: 2,000 materials to job 71 and 11,000 to job 72. So this means that we have now asked for these raw materials to come to our manufacturing floor so that we can begin working on them. Because it was able to tell us which jobs they're going to, we know that this is going to be direct materials because it was able to be traced directly to a job. So we'll just do a journal entry for work in process for the total 13,000. And then we're gonna we can just do that as a total. We'll keep up with how much each individual job is on the job order, and we're taking it out of materials inventory and putting it into WIP. For Part C, during December, Legend Guitars accumulated 350 hours on job 71 and 500 hours on job 72. The total direct labor incurred at a rate of $10 for job 71 and $15 for job 72. So because I can say that these employees work specifically on a job, I know that I can trace it to a job. It goes into work in process. I will do work in process for direct labor, and it will be 350 hours times 10, so that's 3,500. And then you would do 500 times 15 for job 72, which would be 7,500. So 7,500 and 3,500 will do 11,000 for work in process inventory. And then wages payable, because I got to pay these people, so I'm going to set up a wages payable for this, showing that I owe them the wages. And again, the reason that it goes into WIP is because any kind of direct items goes straight to WIP. All right, during December, Legend Guitars incurred the following: $200 glue, $300 sandpaper, $2,000 of indirect labor, $900 of utilities, and $1,200 of factory depreciation. So this glue and sandpaper, I wasn't able to tell what job they went to, so that's indirect labor. The utilities is assumed to be factory, and so is the depreciation. So all of this is factory overhead, which I'll later apply this to a specific job through allocation. For now, all factory overhead is debited to factory overhead. In its entirety. So when I add these up, I will get 4,600. So now we're going to see what we credit it to. Well, the glue and the sandpaper came from our raw materials. So we need to take it out of materials inventory because we're placing it into factory overhead. So that is the glue and the sandpaper together, which is 500. And our indirect labor needs to go to wages payable because we're going to pay these people. So that's 2,000. Our utilities will go to accounts payable. And that was 900. And our factory depreciation will be accumulated depreciation. For 1,200. Now notice in previous chapters what you would have saw for this would be a wages expense and wages payable, but now we're going to be placing it all into factory overhead to allocate it to our job. So actual cost will go into factory overhead. Your utilities would have gone to utilities expense, but now we're debiting it to factory overhead because we're going to allocate it to a job. Accumulated depreciation would have gone to depreciation expense, accumulated and credit accumulated depreciation, but instead of depreciation expense, we're doing it into factory overhead. So all of these items would have been expense before, but because they're in the factory and we're going to capitalize them and place them into a job, they're all going to go into factory overhead. So that's what your entry would look like. All right, let's look at E. Legend Guitars estimates that total factory overhead will be $50,000 for this year. Direct labor estimated to be $10,000 for Legend Guitars. Determine the predetermined factory overhead rate using direct labor hours as the activity base. So letter E, this is where we're actually going to allocate our factory overhead to individual jobs. We're going to do that based on the predetermined factory overhead rate, and in this situation we're going to be using direct labor hours to do that. So the rate is always calculated like this: estimated factory overhead divided by estimated base. So here our estimated factory overhead is 50,000 and our base, and the 50,000, the estimated, they tell us how much we think we're going to have, because when we first set up this allocation rate, we don't know the actual factory overhead. We don't know how much, so that's why we estimate. Then our estimated direct labor hours, again, we don't know what the real ones are, so we're going to do our estimated. and here are estimated as 10,000. So if we divide, our allocation rate is 5 that we're going to be using all throughout the year. We're going to use 5. So how do we apply that? What we do is take actual direct labor, whatever our base is, times our rate. So here, actual direct labor hours, because that is our activity base, and we know we're going to take that and times it by our rate. So let's look at see how this works. For job 71, are 350 hours for job 71 and 500 hours for job 72. So make sure that you use actual when we get ready to apply our overhead. And then the rate was 5. So if you multiply your 350 times your 5, that's going to give you $1,750 for your overhead for job 71. For job 72, I'll look for my hours, actual hours for job 72. So let's go back up, and we said job 72, our actual hours were 500. So 500 goes here. Our overhead rate is 5. Then when you multiply the actual times the rate, you get 2,500. When I add these two together, I can find out how much I'm going to be allocating. So it's $1,750 plus 2,500. So my total would be $4,250 of overhead applied. All right, let's see how we do this. We want to allocate, right now we've debited $4,600 of factory overhead up here. We want to allocate some of that out, and according to our rate, we're going to allocate $4,250. If it has a debit balance, in order to take it out, factory overhead will be credited. So we're going to credit factory, I'm just going to put FOH, factory overhead for the amount $4,250. And where are we going to put it? Well, whenever we put anything to a job, it goes into work in process for the $4,250. So in other words, we didn't know how much of this went to jobs 71 and 72, but based on this estimate, we have just assigned some of it to jobs 71 and 72. That's what we've done here when we've allocated our factory overhead. All right, determine if factory overhead is over or under allocated. Journalize the entry to close factory overhead at the end of the period. Okay, so at the end of the period, we're going to look at factory overhead. We're going to see whether or not we over or under allocated. So if I look at my factory overhead account, I started off with I already had a $200 back credit balance. And then I have $4,600 of actual. And I allocated $4,250. Okay, so that was the $4,600 was the actual, then the $4,250 was the allocated. So what I'm left with is $150 sitting there. So I need to close factory overhead out. I want this to be 0. So how will I close factory overhead out?